A couple of months ago, when cryptos were peaking, I saw some huge gains that I had made, and I sold quite a bit of cryptos. And I've had that cash sitting on the sidelines waiting for this pullback. I've been watching things like the commitment of traders report and so on. Now, one of the sad things is that this big plunge here happened on a Thursday, and the report comes out each Tuesday, but they don't report it until the following Thursday or Friday. And so I've got to wait until not tomorrow, but a week from tomorrow to find out what has happened today, basically, as far as the commitment of traders goes. But yes, I'm going to be using this pullback. Now, this pullback was driven both by the news, the FOMC meeting, and the seasonality. Your chart here is the average seasonality, and this is 1975 through 2000. What I'd really like to see sometime is a chart that takes just the bull markets, not the bear market from 1980 to the year 2000, but a chart that is averaging the gain and loss of silver and gold during the 70s and the 2000 bull market. So in other words, 1971 to January 1980, and then the period of time from the bottom in 2000 to today, and see what I'll bet the seasonality is even stronger when you separate the secular bull and bear markets. But yeah, I'm trying to be one of those strong hands. And so I put some cash on the side that was profits, some big gains in some cryptos for the thing that I see as absolutely inevitable. I just don't see that there's any possibility that gold and silver will not perform in the coming crisis. But I do see a possibility that the world's central banks may try and make it difficult for crypto investors because they see that as a threat to the fiat currencies. And this is all caused by the Federal Reserve and the world's central banks creating currency from nothing, which dilutes the currency supply and steals purchasing power from everybody. And then when it goes back into the markets, the Federal Reserve, for instance, buys mortgage-backed securities, which keeps interest rates low on real estate and makes it easier for people to buy into the top of a bubble. It's a wealth transfer that's going on that the Federal Reserve is coordinating. It's a wealth transfer away from everybody and away from the masses to just the people that either own their own home outright and don't actually owe on it. One of the things about real estate is people don't realize it's a leveraged play. It is just like margined stock brokerage account. It's got leverage to it because one of the things that we don't see here is the mortgage rent ratio, which I would like to see. And that's the cost of carrying a house. If you buy a house with a 30-year mortgage, plus the insurance and all the other carry costs, can you rent that house out for a profit or not? And that is another one of the indicators. But this affordability index is we're back in Insanesville. And this is the almost everything bubble because the stock market is also way above, like the PE ratios are way, way above the 1929 peak when that crash happened. And so this is all the Federal Reserve's fault. And when the crisis comes, I've said before that in 2000, it was the stock market that crashed. In 2008, it was stocks and real estate. This time, it's going to be stocks, real estate, and bonds.
Before we continue, help us by smashing that YouTube like button and subscribe now to this channel. This shows the algorithm that you value the information, and it helps us spread this message. Sharing is caring. Please like and subscribe now. Thank you. And now, let's continue.
This is going to be the greatest financial crisis in history because this is only the second half of the economic storm that started with the 2008 crisis that they just kept on papering over and papering over and papering over and kicking the can down the road. And we have just topped the 2007 peak here in real estate prices. And he's adjusting this for things like building costs, population, interest rates, and inflation. So this is yet another indicator. And this is the indicator that back in 2005, my first recorded presentation at the Silver Summit, I presented this and said that real estate was in a hyper bubble and it was going to crash sometime soon. That was 2005. So here we are exceeding that peak. So it is a little bit the fundamentals, I would agree, are a little bit different this time around, and we don't have all of the zero down, no proof
ninja loans, yeah,
the ninja loans, right? Yeah, so it's a bit different. The subprime crisis is not happening along with this, but the overvaluation is definitely there. So maybe he's right. Maybe it will be. Well, his last part of the statement where he says before the new you-know-what goes completely sideways, that's basically when the you-know-what hits the fan. And that's the day you're waiting for with gold and silver. So to get rid of your silver and go to cash, just as we're getting to the point where the big payoff is finally right around the corner here. That's... I'm not much of a gambler, but I used to run a business many years ago that was headquartered in Las Vegas, and I had to spend a lot of time there. And I would walk through the casinos, and it's like that person that spends hours and hours at one slot machine and then leaves, and the next guy puts in a quarter or a dollar or whatever and pulls that handle and a big payoff. Reconsider your position, but I do not give advice. I just tell people what I do. But this is the point where I'm doubling down. I'm using this pullback as an opportunity because I know that everything else is in a bubble. And the very fact that somebody is thinking about leaving the silver market right now, that sort of shows that it's not in a bubble. There's no bull market in history that ends before exceeding its previous high of the last bull market that I know of. And we actually did not hit $50. We hit $48 this time. And it was 50, I think the intraday on one of the exchanges was $53 and something, 53.85 or something like that in 1980. And so this bull market is not over. And we've been through this brutal, grinding sideways pullback that's going to be ending soon. It would just be a shame to leave the slot. This isn't a slot machine either. This is an investment that I see, to me, as guaranteed to pay off. This is at one of the meetings or some press conference, and it's, hey, Jerry, what comes after $1 trillion? So the next step, we used to measure the deficit and the debt in the millions and then the billions, and now it's the trillions, and very shortly, it's the quadrillions.
What to do in such a situation? Inform yourself and keep your financial education strong. We from the Compact Group offer our loyal subscribers a free educational portal with first-hand monetary, financial, and economic knowledge. Enter our invite-only Insider Club by clicking the link below. You will get access to first-class information far earlier than the rest. We have prepared a special deal for all our members where you can access a giant pool of Robert Kiyosaki's financial wisdom for just $1. To find out more, simply click the link below and join our Insider Club absolutely free. But there is more you can and should do. Build up several streams of income. More and more people realize that they have to take their future in their own hands, but they don't know how and where to start. We from Compact offer our Insider Club members unique opportunities. Strengthen your financial muscle and get the edge. Click the link below. Become part of our free Insider Club. No financial obligations. But there's one important thing you have to know. You have to become active. So do it now. Become active and see you on the other side.